Welcome to the Trading Lounge, and here we're looking at the S&P 500, and our wave count to the upside is still unfolding as expected. We've got our ABC correction here, so we know that a new high will be made above this high here, and we're tracking 5 waves up through here, which could be complete, or there could be one more little high through here. Once that's done, we can count these 5 waves as an impulse wave, and that would be 5 waves as wave 1. Then would be looking for a counter trend, A, B and a C for wave 2. That can pull back 61.8%, but the base metals are reasonably strong, so we can expect some shallow retracements. There is some trade figures coming out from China today that may impact on that, so we'll just be mindful of that. But once this ABC pattern here is finished, same as this one here, but just one smaller degree, then we'll see a move further to the upside there, and that will be the same for the US 30. The Dow Jones, sorry, the same thing. We've just been tracking, well, you know, the A, the B and the C here. This is just a 15-minute chart, up for 1, back for 2, up for 3, back for 4 and up for 5 here, and I was just tracking this here, but I have to pull into a 5-minute chart here. I had this as up for 1 here, back for 2, and then you know, up for 3 here, back for 4 to here, and then up for 5. So there can be one more little push there. You know, not that it's such a big deal, because we've still got to get from wave 1 here to wave 2, so there'll be an A and a B and a C wave here that can pull back to 14,600, which is really quite shallow, I guess. It's just back to the wave 4 here, so we'll see that sort of play out here. But once that's done, then we'll see this push up to the 14.8, but and that's a profit-taking number, but 8 is. But you know that the next major level up here is 1,500, 15,000. So that's where this impulse wave can take us. One step at a time, though. Let's navigate this correction that we're about to receive, and if we look at the bullish weekly cycle, then we can see Wednesday as being the sort of the midweek high, and Thursday being the bear day. If it's a bear day and it's on lower volume, then we know it's a corrective procedure, and we'll be looking for Friday and Monday to be the bullish days to take us into from wave 2 into wave 3. So that's what we'll be looking there. The European markets, well, same but different. We can label the FTSE as an A and a B and a C, and we are getting sort of 5 waves up here, but it's very sluggish, you know, because the US markets are, you know, in relation to their ABC is much further up here because of course, the weaker US dollar, and we do see the US dollar getting weaker as well, which we'll look at in a moment. But so for the time being, we'll see this market push up here, but the range is going to be much smaller. So a bit of caution is required. And I'm also a little bit dubious about this particular move down through here, as I was on the DAX as well, being not completed as well. So if we look at the DAX from yesterday, we were seeing it through here, and you know, we figured that, look, if we do get support, you know, tested support, it's not enough. The breakout's important, but the retest is more important, and developing support. If it did find support on the 7,700, then we would have kind of had to move in line with the S&P 500, but that wasn't the case, and we've seen this move down through here now. So we do have a 5-wave structure, but I'm also dubious about this one being completed as well, because realistically, I can just certainly, in terms of wave structures, place this here as such. So from this high here, we've got 1, 2, 3, 4, and 5. So really, we could really just label this as wave 3 here as such, and looking for, this would be wave 1 here as such, and then obviously wave 2 here. And wave 4 would pull back to wave 4 of one lesser degree, if that's going to be the case. And then we would be looking at wave 5 down through here to make wave C, so to speak. So, you know, still in sort of bearish mode here. So we just need to be mindful of that. But let's just see how that goes. Obviously, it's not offering the best upside trades, the European market. So better to go with the US. And also Australia, because we have the metals as the one of the main drivers at the moment. And looking at the cash market here, the ASX 200 as a CFD here, we're looking at let's clean that up a little bit. Yesterday, we were looking at, been looking at, this is the low point here. We're looking at our 5 waves up through here. Because we got 5 waves up through here, we knew that after a corrective pattern, we'd be getting another 5 waves up, and that's the case. And the idea was to scale in above the 4900 through subgroup 1. And we can see that we've got 1, 2, nice strong third wave, the fourth, top of the third, the fourth and the fifth here, 4 wave 3. Then we've got wave 4 here, quite small and simple actually, and then we're looking at wave 5 coming up through here. So I guess once the local market opens, we'll end up a little bit higher, but we are looking up here for our 5th wave, which will either make the A wave or wave 1. Once that's complete there, we can expect an A and a B and a C wave through here. It will be 5 small waves, B wave will be 3 waves, and the C wave will be 5 waves, and that will be back for B or wave 2 there. If it would be wave 2, then we'll be in line with the S&P 500. But as a B wave, this would be in a larger A, B, and C rally up there, which would be sort of more in line with the European markets as such, because of, I won't go into it now because we've been into this before, but we are looking at a 5 wave structure to the downside here. So that would deliver an A and a B and a C as a counter trend, and then we'll get another 5 waves down. So we do need to see if we're going to be lining up with the US markets or not, and that would also mean that the base metals and the precious metals, what we'd be looking at would be also a rally as well, an ABC rally as such. Let's have a look at the commodities as they are the driver. Firstly, I'd like to look at copper because it's quite central to the base metals, and also for the Australian dollar as well. It's pretty much got the same wave count. So we're looking up through here. We've had our low come in through here, and we're looking at, we understood that we got 5 waves here. So because we got 5 waves here, we knew that we're going to get further upside. And one thing that you can see here is that these trends here are still expanding to the upside. So we can look at, in terms of our 5 wave structure, we'll be looking at wave 1 here, wave 2 here, and then we're still looking at wave 3 all the way up through here. So we still got, in wave 3 here, we'll have 5 waves. So we're looking at 1, 2, 3 that's not completed yet, 4, and then 5. And then inside 3 here, we've got 5 little waves for wave 1 here, back for wave 2. Wave 3 to the upside is still unfolding, so that will be the 1, the 2, the 3, the 4, and the 5, unless I've made a mistake and it's in here, but I think that's okay. The 4th and the 5th and so forth through there. So we'll be looking up at retesting the 350, the midpoint, 5 being the second strongest number in the market in psychology terms, where all the orders will be sitting. So that will peg that market at that point there and bring it back into the wave 4. Will be back into 38.2% retracement of wave 3. But look, this is the copper has been leading the gold. It was the first to turn. It affects our local market and the Australian dollar as well. So it is an important aspect, and I can say that this really strong move in the middle here is the center of the whole structure that we're actually looking at. So what we've seen here, if we turn that on its head on the flip side over here, then we'll get that over here. So even though that this is the strongest part in the wave structure, the third of the third of the third, then the waves 3, 4, and 5, 4 and 5 will be more like this structure here, just sort of inverted, I guess. So what you see is not what you get. Next, alrighty, the gold market. This is a 4-hour chart, so it's a little, a bit more condensed, but the same thing as well. We're getting our 5-wave structure up here, so it's pretty much in line with the S&P 500, and we'll be looking at this as an A wave or wave 1 through here, but we will be looking at an ABC coming back in. I've just drawn that quite shallow here, but it could come back 61.8% once that high is in play there. There can be another little high in here. But once that's done and dusted, then we can see this come back in here. So best not to chase it into this area here, a little bit of patience. So perhaps the late Thursday or Friday morning, and we'll see that move up to the upside there. But it's also this block of price action here would come with the most volume as well, so that will be the supply area. That's the aspect that's going to pin this this wave A or 1 up through here. So this corrective pattern here could actually happen across, the 1600, not come this far back, but in one way or another we'll just follow the patterns, and then even once this starts to move up through here, it'll be a series of waves 1s and 2s and so forth. So it's just going to be all a bit of a slug and slow going within this area through here, unless something comes out of left field. The US dollar could also be a part of this as well. It will also be finding support as it comes into group 1 of 82. So that's 82.30, 82.20, 82.10, and then of course 82, which it should have a bounce off that. So that bounce will cause the corrective pattern within this area here as well. You might want to bring in the bonds if you're looking at notes, if you're looking at that in detail. The silver's the same as well. This is just a 1-hour chart here. You can see that the strong point in the wave structure here. So we could say that once again, a bit like copper, we're in the middle here. Silver has been leading gold as well. The idea yesterday was to be long above the magic 72 number. In this case, the 27.20 in here. So I suggest just staying long. It's going to be a struggle through here, but eventually it will push higher. If you want to take money off the table at 28, then that's fine too, or perhaps in part profit there. The oil market is in its rally as well. Let's just find the right pattern here. Okay, so just on the 4-hour chart here, we were calling this low in here at the wave 5 here. So this will be followed by an A and a B and a C. Looking back at, well, this is the first block of supply here. The next block is up through here. The standard 61.8% retracement level is around the 95. So the 50 to 60 at 95, 5 being the second strongest number. It should have problems there. We've left this trend line in play here because normally when something moves through a trend line, it will come back and retest it at that stage there. So we're expecting this to move up through to here and then to roll over, but that's not going to be in line with the S&P 500, is it? So there is a bit of conflict there. So any trading done around this area here would really need a solid, perhaps even 2 retests, either as support for being long and a double retest for short positions. So it won't be one of the best trades out there. There will be better trades out there. Let's look at the US dollar and the AU and the... Okay, looking at the US dollar through here, we're still tracking this lower, and we can see that the 2 retests here have failed. Well, that's another retest there. But look, we're under the 83, which is the top of minor group 1. And look, as this market comes down through here, and we have to expect a bounce, we have to expect support at 82.30, expect a bounce of 82.30, which can go back to 82.40, and then a move down to 82.20, which will bounce back to 82.30, and then down into 81.10, and so forth. So there'll be small, when the market's moving into group 1, it gets choppy price action into 1, 2, and 3, 10, 20, and 30 in this case. There will be support down here. We can track 5 waves from wave B here down to wave C. That will be down for 1, back for 2, down for 3 here, back for 4, and down for 5. So it may not even come to the 82, but there will be a 3-wave bounce. B waves have always got 3 waves in them, a little bit like this little guy here. So we expect a 3-wave counter trend and then further down. Point being, because there's support through here, that's going to be reflected in the euro at 131 area, so to speak. So the euro can go to 130, 130 into group 1, so to speak. So if we just have a look here, group 1 here, micro group 1 would be 10, 20, and 30 here. So if we just go from this point here, we can see that we've got this move up and back, and still strong 3rd wave coming in here, 4th and 5th. So we can expect the market up in this area here. And if it's going to follow the S&P 500 too, well then, of course, it's completing its 5 waves up. So there is obviously some correlation there. So, we have to expect a corrective pattern across the 131, and the 10, 20, and 30 here will be the supply and the resistance, and the group 2 here would be the 80, which can come down a bit from there by the looks of it. 89, 80, 80, there we go. So 80, 72, and 65 will be the support. So group 2 here and group 1 will be the range, and the 131 will be the balance line. There is on the daily chart over yonder here some gaps which will be filled at the 131 here. The wave structure that's coming up here, there's a couple of different ways to count it. We are looking at this. We had a target of 131 up, 131.50 up here, possibly even higher. I can still see that this has got impulse waves moving to the upside. So we'll continue to run with that. But if you're trading long, if you're in, you can stay in, but expect a little high up through here as such. I might just use this here, so we can expect a move into here, then pretty much some type of correction that's going to follow the S&P 500 and all the other markets as well in that case, and then we'll see a move further up through here. So really you want to allow that to make the first high here, and then allow some type of correction through here, then back onto 72 here, and then scale in on the 131 up here, and then build the trade in through group 1 here. Also understand that support on top of group 1 here on the 131.30 will get you higher as well, a bit like group 1 down here, 10, 20, and 30. We know that, we know that it will vibrate in this level here, but if it ever, got support on top of group 1, well then we go long. It's that simple. So the number 3 separates the market from the closest largest number, and it's that point of separation that you're actually looking for, that detachment there, because once support is on top of 3, then traders naturally think of 5. Right, the Australian dollar. All on track here. As you know, we've got our A and our B and our C here, and we've just been watching it move up and trading long, and this is the wave structure in here. It's still moving to the upside, so we've got still in wave 3 to the upside here, which could be right there actually now. So expect a wave 4 to come into play, then a wave 5. The wave 5 will be trapped up here. So once again, a little bit like we're explaining with the euro here, we can expect some sort of wave 4 to come back through to here, a wave 5 up through to here, and then we'll be looking at the ABC in this case. So we'll be looking for an ABC back, which can pull back, 50-60% of this structure here. But if we just put it here at the midpoint, but it may only come into this sort of area here. But once that's complete, then we can see further upside here. And it's after this corrective move back down through here and retesting support on the 105. The 105 is really important because it's halfway between $1 and 110. And it's the balance line through this whole market. So support on this here, we can be looking for a much longer term move to the upside from that point there, and also getting anyway, we'll just leave it at that for the time being. So look, we've been long. If you want, longer term traders can stay long. Shorter term traders can navigate this through here, and you'll see that on our chart. So we'll keep you up to date with that. So look, that's it. Look, just as a bit of a wrap, the 5-wave structures in most of the indices to the upside are completing. So we can expect Thursday as a bear day and Friday and Monday to the upside there. Thursday is a day that normally clicks out stops. So you either give them more space or you start taking profit, or nowish basically. So, the end of the day, so to speak. Alrighty, that's it. So good morning and good luck.